Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We are bringing the VRIC to you with our series of expert online panels, and we have another exciting one lined up for you today. We've got Peter Grandich, founder of Peter Grandich and Company, and Peter Spina, founder of goldseek.com and silverseek.com. We're going to be discussing, of course, gold, silver, as well as the broad economy. Get their thoughts on what they think is most pertinent in markets today. Gentlemen, it's great to have you both on the show.
Great to be here.
Great to be here.
So I want to start with the broad markets and the economy. What are the main themes and trends that you've been watching that you think investors should be paying attention to? And Peter Grandich, I'll start with you on this one.
Well, I've taken in the 40th year of my career, the most harsh outlook, and I've called it was time to build a financial ark. I'll just name the 5 reasons. If you ever want to discuss them, that's fine. The first is one that's been predominant. It's only gotten worse, and now it's acute, and that's the national debt. And the reason it's acute now is we're getting to the point where even making the interest payments now are going to be challenging, if not difficult, if not impossible, as we continue to spend far more than we take in. The second one is a retirement and an aging crisis. 65% of Americans are working paycheck to paycheck. They're never going to reach the beautiful ads on TV every night about how wonderful retirement could be if you just come with us. And that will become an economic, social, and political burden. Now, number three, when I first put out this report, is challenging number one right now because it's growing at leaps and bounds. And that's the immigration crisis, invasion, economic war, whatever some people want to call it. But the most important thing, without getting anything political, discussing individuals, whether they're here for good reason or bad, the fact remains is that 10 million or more people have come into this country, most of them with just the shirts on their back. Now, whether or not, whatever motives they got them here, it looks like most are planning to stay, and they're taking full advantage of economic things that are being given to them federally, state, and local. That is only going to compound the already increasing dire economic, social, and political landscape in the United States. Not to mention that I also believe, unfortunately, because of what we're seeing in recent days, Jesse and Pete, that I believe we're going to see marked increase in silver unrest. And it's going to come first as that group protests that they're not getting fairly treated, which we've seen in some cities already. But then the people on the low income scale who what little they were given in terms of government assistance is being taken from them in order to give to the immigrants. And they're not going to stand for that. And they're going to point to that group and say, it's because of you, I'm losing what little I have. So I'm unfortunately believe that's going to lead to something more than an economic clash. The fourth is commonly known, at least by groups like us, but still Wall Street scoffs at it, treats it like it's a joke, and the biggest joke is going to be on them, and that's the BRIC formation. No matter whether it reaches the goals that I believe it's going to be, I believe one day it will rival what the Industrial Revolution was to world trade, or it falls somewhere in between. The most important thing to recognize in that is that those countries are looking not to deal with the United States and not to deal with our currency. And that can't be a positive for us. And then the fifth one, which would be if it could be working, could possibly fix the other four, but it's broken the most. And that's the political paralysis. Simply put, Democrats and Republicans can no longer work together in any meaningful way. And the compounding the issue is in each party, there are fractions that are moving away from the center of whatever that party stood for. So with that and some other things like a little thing called the Middle East and Taiwan and others, I just believe it's time that you have to build a financial ark where capital preservation now is far more important than capital appreciation.
Very well said. Peter Spina, what are you watching right now when it comes to the economy, markets, geopolitics, etc., that you think investors should be paying attention to?
Well, I think Peter nailed it there. This is a combination of various factors that are coming into play. We talk about economics, but much of that is also influenced by the general larger political issues at play, the larger political problems that we're seeing around the world, especially in the United States, the divisions, the cultural problems. A lot of things are converging, and being more of an observer to the United States, have left the country many years ago, it really looks like, it's even speaking with the people in the United States, there's a sense of fear about what's happening on with the elections, more division. People are unable to talk to one another. There's such sensitivity. So that's kind of amazing to see, and that goes hand in hand with the cultural problems happening. But really, the economic issues are starting to really show up. I think the big, looking back a couple of years ago, I think there, like in World War I, when Archduke Ferdinand was assassinated in Yugoslavia. Well, it was not Yugoslavia, in Serbia. It was a shot heard around the world, and I think similarly, a couple of years ago with the war in Ukraine, the next level of this war, the escalation of it, is another shot that should have been heard on the world by investors and other observers, but a lot of people have not really been paying attention. If you're in Europe, or especially Eastern Europe, you really see what's happening. The war is a lot more of a real war. Watching it from abroad, it kind of, you make some headlines, you don't really, see the day-to-day news, but it is a horrifying loss of life. It is a horrible thing that's going on in general with the war, but has much broader implications. So this is something we talked about a couple of years ago. This war isn't being fought it's not a proxy war. It's not just about Ukraine. This is really the colder war. This is the Cold War now moving to back, from the old times into a new version of it. And that's really got huge implications, because with the war a couple of years ago, the United States and the Western European countries just decided, hey, this is something we're going to stand up against. We're going to go fight Russia, basically. And we've weaponized the dollar, we've weaponized treasury bonds, and the SWIFT payment system, and so on. So that has led to a series of events that are coming more and more into play now. Economic wars of sorts, monetary issues. There's definitely a lot of games going on. It's not just Ukraine, the proxy war. Now we're having issues in the Middle East. You have Taiwan. So there's a lot of sensitive points. There's a lot of risks out there. And at the same time, you have the imperial dollar that it has now starting to get rejected by parts of the world. A lot of the world would like to reject it. It's not an easy thing to do, but they're working towards that process. So you do have motivation by the BRICS nations and others to de-dollarize. You've seen China de-dollarizing. You have a lot of things happening at once, and that's a very dangerous situation when you see the United States having such massive deficit spending. The debts are just absolutely to the roof. Like Peter said, the interest payments are surging. They're not restraining their spending. They're just pushing more and more and more. So this isn't going to turn out well. There's going to be a breaking point. And based off my observations of just how the political situation works in the United States, and just the way that politics and everything's happening, no one's going to make real changes until the market forces them to do it. And I think that's starting to play out more in the bond markets and the debt markets, and that's going to, a real credit event. It appears to be coming. And if the rates aren't, if they drop the rates and try to, stoke the economy again, you're going to get a big surge of potentially in inflation. But we already have another wave of inflation happening now. So, to me, it seems like the Fed's stuck in this catch-22 position. They're trying to contain inflation. They've got an economy that's been a bit more resilient than maybe had expected, but it's starting to show its weaknesses. And now that the economy is weakening, what are they going to do? If there's another serious crisis, this reverse repo liquidity drains happening, all these other things that they've done to kind of prop this up, it's coming to a head. So I don't see I'm not very optimistic in general on a lot of different things. And in general, as an investor, I wouldn't be touching the markets. It's more risk than reward here.
Very interesting breakdown as well from both of you. Peter Grandich, let's get your thoughts on gold's role in all of this. You mentioned the rise of the BRICS nations, the potential for a gold-backed currency. Obviously, this was something that there was rumors swirling around the internet last year that they were going to announce a gold-backed currency at their summit. They did not. This led a lot of people in the pro-dollar camp to kind of point and say, see, this is all conspiracy. Nothing's going to happen. However, the BRICS alliance is still in its early stages. They're recruiting more member nations. They appear to be strengthening slowly but surely. What are your thoughts on gold's role in this whole geopolitical setup that we've just discussed?
So I would say that my love for gold, which I think is as strong as Peter's and some others, comes from a little bit different direction than some. I approached it mostly from, hey, it's another opportunity for capital appreciation, not because it's going to end or I'm going to need ammo or dry food and a bunch of gold in order to survive in it. So I became so involved in it from 1200 to 1600. And then in 2021, I had a very unique decision. It wasn't highly favorable. I can tell you, our planning group, we saw business fall off, not drop, fall off. But I suggested people that gold would actually outperform both stocks and bonds, and that stocks and bonds could lose double digits. And if you wanted to, it was okay with me if you wanted to sell general equities not related to natural resources, and especially bonds. And this is, of course, when interest rates were down to 1.5%. And that gold would outperform stocks and bonds. Even some gold people thought that was a little bit too absurd. But as we sit today, that's exactly what happened. And so I played it mostly for a capital appreciation. And because of that, and because we have clients with large scale gains, and as great as it's done, and I do believe it will continue to go higher. I do believe my original target, which was 2,500 when it was 1,200, I think will eventually be extended. And I think we can start to look at 3,000 as a possibility. But because we have gains already, because I've watched too many times in 40 years gains evaporate, I have in recent days, including today, suggested anywhere from 5 to 25% profit taking. Gold is somewhat overbought. In fact, it's severely overbought short term. Doesn't mean it can't get a little bit more extended towards 2,500, but there's a correction and consolidation here. And one of the biggest bullish factors, now, like Peter, I've talked about how gold was being accumulated massively. It wasn't being purchased for a trade. It wasn't a bunch of speculators. It was being bought physically because something in the future, I believe it will be tied through BRICS, will come that will be needed as an alternative to the dollar. And whoever introduces groups or what have you that needs to offer something more than what the dollar is, just fiat currency. And gold will be used in whatever it is, even if it's just among themselves that they develop something to trade among that and all. That's the main reason why I think of all the physical buying of gold. But what I also feel now at this point in time is a couple of other metals, one which Pete and I go back a long way. I was never loved by the silver bugs because I would always put gold before silver and had, but I think now it can come in on equal terms. I think what it doesn't have monetarily, it makes up for how much improved the fundamentals industrial wise has come for silver. And of course, copper. I took recently when copper was down at 4, and suggested that even copper should now stand at the same level or maybe a little ahead of gold. But realistically about gold, and I think this is the most important thing to remember, I know Peter's going to agree with this. The financial community, mainstream Wall Street, treats gold like kryptonite. The day you turn on and watch the major financial networks have people like me and Peter on one after another, commending gold, urging people to be in gold, we should run and sell our gold because that would be the ultimate sell signal. It is the Rodney Dangerfield of all investments in my 40-year career. Even today, if you look how well, we just noted, I hate to take this time, but this is critical. We just noted not only has it performed great the last few years, since January 1st, 2000, gold has outperformed stocks and bonds. End of story. And yet, how many people turn on or meet from the financial community, anybody suggesting gold to be any part? In fact, I'll remind this and I'll shut up, Jesse. There's only 3 tier 1 investments considered in the world: stocks, bonds, and gold. And I always say this to our people that come in: you own stocks? Oh, yes. You own bonds? You own gold? They go like this. Well, if they're all considered 3-1, don't you think you should have some of each of them? So I'm still extremely optimistic. It still has a way to go. It's certainly not as cheap as when we were buying at 12 and 1300, but I believe things we've seen happen are happening for bigger and more important reasons, and gold's going to play an important role in whatever that may be.
And Peter Spina, your thoughts on gold's role in the future up ahead here?
Well, it's difficult to see a common BRICS currency backed by gold. There's too many other issues within the BRICS trust among partners and so on. But gold is a unit of trust. It is something that is quite unique in its ability to bring various parties together who have distrust among one another at trading partners. So, it is going to be something that comes into play as the dollar's value becomes more and more problematic. You just look around the world, central banks are buying record amount of gold. This is quite amazing. Why would central banks not load up on bonds, treasury bonds and other things that are very, higher yields and, all this so on. No, they're buying gold. They're not buying dollars, euros. And so you see a diversification into gold by central banks because they know there are some issues ahead. And I would expect among the BRIC nations to see gold come in as a settlement when there's imbalances among trading partners. Gold will be used as a way to settle those excess, imbalances. Common BRICS currency, that seems a little more challenging. I'm not fully subscribed to that, but I do believe gold will play a role. Greenspan did, mention that gold is a premier currency, and eventually, when there are currency problems, gold returns back to its, role as the premier currency. So I think we're seeing that, and you see central banks around the world loading up on it. It's not just China, but also here within the EU, you have Poland, the Czech Republic, Hungary. You have some huge accumulation of gold taking place, and they have some of the central bankers there have said some things about what they see happen here in the EU debt and some of the challenges and so on. So there is trust among the central bankers of their own fiat currencies that they're managing. So I think it has quite a bright future, especially with all the problems, especially when you have wars and being fought between great superpowers and a breakdown of trust among trading partners. So if the dollar is going to eventually start to lose its imperial dollar status, it's going to become the reserve currency in the world. What will replace it? And that's the biggest challenge because there really isn't good competition to it. The Chinese yuan, are you going to trust that? The euro? No, there's nothing really there to replace it. So that's where I think gold comes back into play, and that's why you see heavy central bank buying, and there'll be. I eventually believe that all this debt that we're dealing with in the world, there's going to be a reset, and gold will be the item, the unit which they reset it against, and the revaluation will be done against the gold price.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
That makes a lot of sense. Let's shift to the gold mining sector now. We were talking before we hit record today about the mining space. The majors have woken up to some extent with a new all-time high price in gold, the Barricks, the Newmonts, the Agnico Eagles. However, I've spoken to some people, Adrian Day, a few other people who think that the sector's still very undervalued. And this is kind of just the beginning of what could be a much larger and longer bull run for the gold mining sector. What are your thoughts on the gold mining sector? And do you think a rising gold price will eventually cause the developers and the explorers to join in? And Peter Grandich, I'll start with you.
Well, I'm content to start my 41st year, and I feel very, very good about my overall record, except there is a pimple which grew more into a large blemish, because 2 years ago, if you and I had this conversation, I would have told you to back up the truck compared to what metal prices were then and buy mining shares in juniors, because that's exactly what I did. And then you would ask me a year later, hey, Pete, they're somewhat off. What do you think? And I would tell you, my God, what a buying opportunity. Back up more of the truck. And that's exactly what I did. And then by the time at the end of this year that passed, it looked like, wow, the worst is over. And then, of course, the early part of the new year picked up where it left off. But finally, light. I don't think it's a new day yet, but finally, darkness seems to be dissipating. And the reason why I'm still quite optimistic, and I guess one thing I should say is that if anything has been said about me that can be published anyway, is Peter Grandich tends to be too early. And my answer always to that is I'd rather be 2 years too early than one day too late. I think you have to make this decision here. Do you believe the need for metals will continue? There's no question. Is the EV story a year or two seem like a no-brainer turn into questionable? Yes, it's probably not going to reach the levels some first, but a year or two ago, but it's still going to have a major impact. And now we're learning as AI becomes the latest hot thing, there's going to be a lot more demand for electricity. And with that, certain metals like copper and other are going to. So the need for metals themselves is not only constant and looks like it's going to remain strong, but because of where mining has been in the last 10 to maybe as much as 15 years, there hasn't been a lot of money spent on it. And quite frankly, majors, some who I still speak to, tell me that they're going to think twice to certain parts of the world where they're going to go because of the social, political, and economical ramifications. We've seen it now in Panama as a poster child for what can go wrong. And then the other problem on that is important to take into consideration if you look at shares is the grades. Grades are declining sharply, even in the particular copper market, which always means you have to spend more money to get the same amount of net result out of it. So all in all, as bad as that sector has been, as separate as, and we would, and I know I speak for a lot of people, how could gold be at 1,900, 2,100, 2,300, 2,450, and my stock is moving, the fact it's gone down, and they have a wonderful project and all that type of stuff. There is a turn coming, and you brought out the signs. The majors have started to move. Financings have come back. I've watched several private placements into quality companies that I've invested in, and they doubled it within a couple of days. And that's a really, really good sign. You need to see that before you can expect it to be filtered down to the regular trading. So I guess, again, being too long, Jesse, but I think it's important. As bad as it's been, it probably set it up for a better run because so much washout has occurred. I can't imagine you still own now. What would drive you to sell it? I think you're in like for life. It's like, like they close the door and you're in. And that's the attitude. And any shift, and one thing I would tell people, don't look for a crash in the stock market. Any shift or rotation out of what has been what most people have been doing, stocks and bonds, technology, I'll call it Bitcoin, but I have another word for it. I call it Bitcoin, but we'll probably save that for another day. The bottom line is that rotation out of that, just a little bit, not a lot, is going to move that whole sector. So as tough as it's been and as wrong as I've been, I don't think I'll have to do a Fonzie by the end of this year and go, I was wrong again. I think this is finally the year that the metals shares have their day in the sun.
And Peter Spina, would you tend to agree with those sentiments? Anything you'd like to add regarding the mining sector?
Yeah, I think it's important to see that despite the gold price last year stuck up near $2,000 an ounce, it hasn't been extremely profitable for the miners. And that's because the true inflation is showing up in the mining companies very quickly. They have to deal with energy, labor costs, commodities, sorts of input costs, which show up right away when the inflation takes off. So you look back to the gold price high, 2011, gold hit nearly $2,000 an ounce. Miners were taking out of the ground. So on average, $750, $800 an ounce. It was huge profit margins. Now we ran up towards 2000 and the average cost of mining is $1,400 to $1,500 an ounce. So that's the average cost. So there's companies up there like Newmont had Canada. I think their mines, or was it Barrick? They were up near $2,000 an ounce. There's a lot of gold mines out there. Like Pete says, they've high graded a lot of it. And now you're having issues. The costs are going up. The deposit qualities are going down. Investments haven't been made during this long downturn. So what I see now, and I think is a bullish sign for gold, silver stocks will join here too, is the profit margin expansion is back on. So now that gold's broken above a very defined technical resistance, margins for these miners are really expanding again. So when gold's at 18, 1900, 2000, it was pretty tight. And the thought of gold going back down to 1600, 1500, scared a lot of people away. The miners, just weren't so attractive when everything else was taking off. Now gold's broken out. It's very clear in the last quarter, in the coming quarters, these numbers are going to start really showing some really healthy cash flow, positive free cash flow numbers coming out of the miners. You'll see that get picked up by more analysts. They'll start upgrading their targets and so on. But there has been such a hate towards this sector. Even the gold bugs are in disbelief. Too many of us have been trained, to expect another, disaster. Gold has a false breakout and our gold stocks get slammed. And even today, even with gold at 2,400 or nearly 2,400, the gold stocks relative to the gold price still haven't reached their levels that we saw last December. So they're still undervalued compared to the December gold price when it was below record highs. So it seems like a no-brainer. I think we're going on, a little bit of a consolidation phase here, but I don't think the gold stocks are going to sell off too much. They're going to be accumulated. And we're starting to see more and more, the gains accelerate. And then eventually, I think you see these big up days and you'll see the revaluations come because fundamentally, they're extremely cheap. There's no longer the fear out there that the gold price is going to collapse down to their, break-even points. And now the numbers, cash flow is really taking off. Personally, I don't touch the seniors unless, like in 2020, I bought like Freeport, collapsed during the big market liquidity, so on. But my interest is in the mid-tiers juniors because they're the ones that are growing. The seniors have a very difficult time growing, especially organically. They have, they're replenishing the reserves, the resources, and that's where the juniors and smaller companies will see more interest from the larger companies in this cycle. I think, what Peter said, that this market has been so oversold over the last years, and it's been so hated that so many people have just left. They've just dumped their shares, and there isn't a lot of supply out there unless a company's really doing a financing. It doesn't take much interest to get it going. And like Pete said, this is a tiny sector, gold and silver, especially silver. There's not that many silver stocks. So a little bit of interest coming in the sector will really take these stocks higher. And I think what happens is it starts turning into a bit of a bubble, it'll overshoot on its valuations, and you got to be cautious there. But right now, the risk to reward is just, I think, screaming buy gold and silver stocks. And personally, I've been focused more on the juniors and much more into the exploration. Depending, like Peter says, you have to be in the right location. That I've spoken to enough companies who have said that it's better to be in West Africa than Latin America right now. Geopolitical risks, we've seen what's happened in Mexico. They've had a lot of problems, and they're passing all sorts of new legislation. So it's distracting, and it all feeds back to the metal prices in the end, because these mining companies haven't been making the investments. The metal prices haven't been creating incentive to develop and explore. So we're having more of a tight, supply situation. So the companies that do exist with nice deposits, I think they'll really shine, and you'll see some nice premiums on the right ones in this move higher. And I believe that process has started with the silver stocks. I think, we broke through some technical resistance. Maybe breaking through the $30 an ounce level will kind of spark the next level. But I've also noticed that the silver price sometimes indicates more of the sentiment in the gold and silver stocks than the gold price does. So if you watch the silver price and the gold silver ratio, kind of gives you a little bit more of indication where we are at, and that's starting to shift into silver's favor, which tends to kind of coincide with the gold and silver stocks. So yeah, timing, you would have thought 2 years ago when the gold price was trying to make its breakout, that was the last chance to still get in at these, relatively extremely low levels, historically extremely cheap. But it's taken a few years for it to really develop. This breakout, had some false starts, and the process has shaken out a lot of people holding these gold and silver stocks as they go chase crypto, NVIDIA, and all these other hot stocks. So to me, I believe this is still the stealth stage of the bull market. So when it does get noticed, then yeah, watch out. Like Pete says, it won't take a lot to get this market moving.
Well, let's hone in on silver, because there's no group of people who hate their own asset more than silver stackers, at least the ones who are vocal online. Whenever I post videos focusing on silver, both here or on my channel as well, it's just the comments of people who came to watch a video about silver who are just bemoaning how useless and stupid silver is. is massive, but now it's started to wake up, and here we are. What are we, around $28 and change at the moment? You mentioned piercing that $30 level could be a game changer. Peter Grandich, I'll start with you once again. What are the catalysts that you think are driving silver at the moment? Because obviously we don't have the central bank buying. We don't have it being viewed as money by a lot of people. It's not a tier one asset like gold. What do you think is driving silver now? And do you think, like Peter Spina has laid out, that silver is also very well set up for a potential breakout up ahead here as well?
Well, long before silver stacking became popular, going back to the mid-90s when I first met Peter, uh, I would say at a conference that owning silver is like kissing your sister compared to gold. And boy, the silver people, as soon as I was done, I couldn't even get off the stage, would come up and give me 101 reasons why silver is going to do this and that. It's always been a favorite of the retail metal interest person. They liked silver over gold. Some of the reason I always felt was because they got quantity versus quality, obviously the price differential and so forth and so on. Then, of course, some things happened on the internet. Some people came out with a bunch of stuff and it grew popularity and so forth and so on. I think the reason now why it's moving is because A, the whole metals market has moved. Gold has had a dramatic move. As Peter said, there has been a ratio. There's the best argument I can give to the silver and why I moved it up to view it on the same level as gold, which is not often something I do. I believe its general fundamentals are the best it's ever been since I've been in the business. There isn't an awful lot of supply. Years ago, the argument was, oh, everybody that's looking for base metals all tosses silver aside. It's a waste metal and kind of that kind of stuff. That talk is long gone because the industrial demand improved so tremendously. And as Peter pointed out, there aren't a lot of people looking for silver, on its own. And in some of the areas, again, Mexico, which was, you said mining and you said silver, people would say Mexico before they said any other country 20 years ago. I'm personally staying within the confines of North America. I'm not going further south than Miami. So even if they discovered in Key West, I'm not going down there. But I think that's also been a role. The concerns of where silver might have been amply available is going to be much more harder to count on. So I would just say that it deserves equal recognition. It's catching up to the breakout in gold. And when they all have a little consolidation, and I think Peter would agree, a consolidation here right now shouldn't be viewed as bad. It's probably healthier than continuing going straight up. Allow some moving averages and stuff to get a little bit closer. That historically knows when prices of anything get too far ahead of certain moving averages, they tend to draw it back down. But I think it has as good of an argument now than it's ever had. And to me, it's an equal play towards gold and copper.
And Peter Spina, your thoughts on the current setup for silver? You touched on it a little bit already in your last commentary about the mining stocks. In terms of the metal itself, what are the main catalysts that you see driving the price higher?
To me, it's almost a no-brainer, risk reward wise. I bought my first 100 ounce of silver off eBay in the 90s. It was $4 an ounce, and back then, there was various arguments in its favor. But back then, you still had the U.S. government with their silver stockpile. They were feeding the market. There was a supply. It took a while. It's taken a while to go through various cycles to get to the point we are now. And where we are now is, I believe, 3 years into this silver supply deficit, which is, to me, is actually a mandated supply deficit because a lot of the demand for silver is coming for the green energy, for the electrification, for solar panels, for electric vehicles, and so on. And this is a very unique situation because you got the average silver producer, it costs them low to mid $20 an ounce to produce an ounce of silver. Even though maybe 30% of all silver is produced from primary silver mines, it is quite a bit of a floor that gives the silver price support there. The lack of investment, the lack of development, the lack of exploration, there isn't many silver projects out there, and there hasn't been a lot of work. And as we just talked about Mexico, the largest silver producer in the world, making it more difficult, and the lack of investment going into that country in the last years. You see a lot of these factors taking place. The supply deficit has been satisfied in part by the selling of silver ETFs, and the Western investors not really, the retail has been not very interested in the silver market. They've been, absent, but the industrial demand is just on fire. Wholesale, the industrial demand is just sucking up the supplies, and it's eating through the inventory. So the longer this process takes place, the greater the squeeze will be on the existing inventories. And I believe the squeeze is really going to come now with the gold price pulling in the interest into the silver market. From a monetary perspective, the gold and silver ratio is saying, hey, silver is extremely cheap here. We have had just the silver, a lot of these silver investors, I knew a lot of them, and myself, I also went into crypto 10 plus years ago, that the prospects of higher returns. And that's also, like Pete says, the return, the appeal of silver to the retail guys, that's just a lot higher upside than gold, say, provides. So a lot of those people have moved on from silver to the crypto side, and that has, a lot of this retail side has kind of disappeared the last few years. So I think now that the gold price is taking off, more people are starting to take notice of silver. You see some interesting stories come out of China. You've seen some record imports going into India. Turkey also record numbers, and that's monetary investment and industrial combinations. So you really see that the fundamentals are just there to support you on the downside. And if the gold price is going to continue to hold these prices, you look down at much higher gold prices, the silver price is not going to stay down here. And what we have seen in the past is once you start to see retail come into this market, it doesn't take a lot of capital to get it going. So I think we're starting to see the first stage of the silver price breakout. It's taking the gold price to kind of get this silver story out there, but it's starting to get more noticed. And I still think it's a stealth bull phase move. And when the average retail guy comes in, and watch out, because it can overshoot definitely to the upside. And we saw that a few times in the past.
Well, gentlemen, it's been a fantastic conversation. Amazing knowledge shared by both of you. Thank you so much for joining us today. Before I do let you go, Peter Grandich, tell us about Peter Grandich and Company, your YouTube channel, and anywhere else you'd like to direct people online.
Well, Peter Grandich and Company is down to just two things. It gave up working with professional athletes after all the social and political nonsense. So we still do planning for U.S. residents, estate planning, retirement planning. And then separately, to keep my toes wet, I write a blog, but I mostly spend time on Twitter. It's an amazing thing. Peter might appreciate to think 30, 35 years ago when I printed a newsletter, I used to have to type it out, bring it to the printer, get it typeset, have the printer run, wait for it to dry so it could be folded, bring it back to the office, stuff it in an envelope, seal the envelopes up, mail it, and 2 to 3 days later, people would learn what I was thinking. Now, in a matter of seconds and a keyboard. So Twitter has become a mainstay of my community. It's quite easy and quite enjoyable, actually. And then there's also a YouTube channel that I have where interviews such as yours. And may I just say, since I have them together, I'd like to thank Peter. I think I was one of the original guests on Gold Seek, and to this day, for some unknown reason, they still call me. And he has a great interviewer there, and I'm very grateful for that and have a chance to tell him publicly after all these years how much I enjoyed that, as well as you, Jesse. And as you know, you and I and a couple others are going to get together soon under pretense of, I think, important topic as well. So I'm grateful to you too, Jesse, for reaching out to me.
Well, thank you. And I'll put links to all of that below. And yes, shout out April 30th. We're going to do an interview on Peter's channel. It's going to be very fascinating with some great guests. We've got Johnny Kovacevic on there as well. Looking very forward to it. Peter Spina, tell us about goldseek.com, silverseek.com, what it is you do there, and anywhere else you'd like to direct people online as well.
Well, maybe I'll go back a little bit since Peter brought this up. I started this side hobby as a teenager in 1995. So we were the first precious metals gold site out there. And over the years, I've been able to learn from wonderful people like Peter about the gold and silver markets. So I appreciate all all the knowledge I've learned from you, Peter. So thank you for that. I have always had an interest in the precious metal sector, not just from the investment opportunity, but what it means as money and how it relates to our individual freedoms and how it ties into the greater realm of all that. So that's kind of how the site started, was following those topics. But we follow and cover the gold and silver markets with a lot of various contributors who have, different insights about these markets. Like Peter was saying, when everyone on CNBC is going to be talking like we are right now, it's not going to be fun anymore. We want to be selling. But one of the reasons we started the site was as an opportunity to get these messages out there. So the site started when the market in gold was bottoming out, and we continue to cover the gold and silver sectors on goldseek.com and silverseek.com, and on Twitter I'm also active talking about various subjects. So that's at goldseek on the Twitter side.
Great. Well, I'll put links to all of that in the description below as well. Thank you once again, gentlemen. It's been an awesome conversation.
Thank you, Jesse.
God bless you both.